Greetings from the Tesla Insights, where Tesla is leading the way and electric cars are redefining how we travel the roadways. Visionary businessman Gary has some audacious forecasts for the future. Get ready for an incredible ride as we explore his secret plan to make impossible profits in the next 7 years and profit from the 54 million electric cars that Tesla is expected to sell by 2030. Prepare to be amazed by the thrilling growth rates, mind-blowing forecasts, and amazing possibilities of this revolutionary technology. It's time to fasten your seatbelt and embark on this thrilling journey into the future. But before we do so, please hit the like and subscribe button first. Now that we have that out of the way, let's start the conversation by learning more about Gary and why his opinions about Tesla are important to us. What is the opinion of well-known investor and former CEO of Avon Asset Management, Gary Black, regarding Tesla? He has held executive positions at several significant financial institutions, such as Goldman Sachs, Credit Suisse, First Boston, and Genesis Capital Group. According to Gary, Tesla will achieve enormous numbers by 2030. Therefore, it seems like a good idea to examine the business's hidden plan. The company predicts that by 2030, 3 times as many Teslas will be shipped annually as there are today. 10.8 slots is an approximate value. In summary, he believes that the adoption rate of EVs will increase from its present 3.4% in 2022 to 6.6% in 2021, and then to 10% by the end of 2022. Up until 2030, it will be 16 in 2023, 20 in 2024, and so on. According to his calculations, there will be a multiple of 60 EVs in operation worldwide in 2030. By 2030, he predicts that up to 54 electric cars will be on the road worldwide, but he says that number is unlikely given the number of robo-taxis. Tesla just has bars, insurance and power outages exclusive to Tesla, because of his intense concentration on Tesla's car production. He is cautious in his estimates, but his expected yearly growth rate of 47% is still astounding. In any case, as you may have noticed, his PE ranges from 61.2 in 2022 to 64 in 2030, and his stock price peaks at $1,500 that same year. I want to stress again why we should take Gary seriously. In addition to his work in finance, one of Gary Black's most noteworthy achievements in the industry was his effective CEO-ship of Genesis Capital Group, where he led the company from 2006 to 2009 and significantly increased performance. Renowned economic and financial analyst Gary Black has been featured on a number of media platforms, including CNBC and Bloomberg Television. The man is knowledgeable. Therefore, assuming that in 2030, as Gary projects, Tesla will have an EPS of $42 and a stock price of $1,500, the price-to-earning ratio P will be 6.4. Additionally, he projects exceptional yearly growth rates of 45 deliveries and 44 EV adoption. His estimates that Tesla's account will increase by 14 by 2023, from 3.1 billion to roughly 3.6 billion, are one thing that truly defies logic. It would be absurd if Tesla still needed to dilute in 2030, while having made net profits of more than $200 billion. Reduce some buybacks at the same $1,000 price per share tag if you wish to spend $200 billion a year. In 2030, the overall market capitalization will have climbed to roughly $4 trillion owing to inflation. 2023 will be comparable. Black believes that if we receive the $552 a share, the price of Tesla shares will soon reach $550. 69p has a market capitalization of over $2 trillion, which is more than twice as much as the present market cap of $600 billion. In the following 6 to 12 months, Gary Black projects that the stock might reach a price target of 69 PE in 2023. This sounds sense. But let's talk about the stock price for 2024. Given that Tesla's sole business in 2025 will be the production of automobiles, 60 would be equivalent to 616.69 or 600 per share. A market valuation of $2.5 trillion and a net income of $45 million are both attainable targets. After, say, a year, if they're making so much money and crushing earnings, the PE would drop dramatically because of the fact that their income expanded by $20 billion, from $46 billion to $66 billion in 2026 at a 45% price. At a PE of 40, the company's market value will be around $3 trillion. I arrive at an $832 price per share, which is absurd given that that is a semi-automatic 4x4 vehicle on its own. Furthermore, dividing 25p/23 for Tesla makes no sense. But you guys know me, so we're being cautious. Keep in mind that Gary's prediction only takes into account the Tesla vehicle manufacturing sector. Imagine what would happen if we added the true valuation propositions of Tesla FSD. As you may expect, the price of Tesla Insurance Energy and similar products skyrockets. We'll discuss it in a moment, but first, let's discuss who else believes Gary is a Tesla bull. Being one of the biggest investors in Tesla, Cathie Woods of ARK Invest has been optimistic about the company. However, Early Munger, the vice chairman of Berkshire Hathaway and a longtime business partner of Warren Buffett, has been critical of Tesla and its CEO Elon Musk in the past. In May 2021, during a speech at the annual Berkshire Hathaway shareholder meeting, Munger said, "I have the reputation of being an old fuddy-duddy. But if a fuddy-duddy like me can see it, somebody else is making the decision to buy Tesla." Woods has been a vocal supporter of Tesla and its CEO Elon Musk, frequently citing the company's potential to disrupt multiple industries, including energy transportation and autonomous driving. At these costs, I consider it to be utter madness. Munger has also attacked Tesla's reliance on government incentives and subsidies, arguing that while Elon Musk is a smart guy and deserves credit, the auto industry is difficult, and Tesla has inherent growth limits even with government support. As with any investment, there are always going to be differing viewpoints and ideas. Thus, other investors may have different opinions about Tesla. While some might consider Tesla to be hazardous or overpriced, others might view it as a solid long-term investment prospect. It is imperative for investors to conduct independent research and make well-informed decisions that align with their investing objectives and risk tolerance. It's now time to add some FSD forecasts to Gary's prediction and see what occurs. I'm excited about this, since in 2022, the average cost to you will be $12,500 due to the rising price of FSD. Actually, they increased the cost to $15,000. Many bears forecast that by 2030, FSC will be worth barely $29,000. In 2020, purchasing an FSD cost $8,000. By the conclusion of the 10th year, the original $6,000 had been raised to an astounding $15,000. Based on past trends, I predict a fourfold increase from the current levels. I have invested all of my money in Tesla stock. I had to sell the mood to pay for the shares I bought yesterday and today. I wonder how well this will hold up over time. I don't know about you, but I'm feeling hopeful. Investors are unsure about the future of Tesla stock in the new year despite this uncertainty. Historically, Tesla has had strong stock performance, especially during its remarkable surge from mid-2019 to late 2021. The stock fell to a bear market low of 101.84 in early January, although it has since recovered by around 93% despite Tesla's conflicting data from the previous year's fourth quarter, which showed lower than projected earnings but higher than expected profits. Musk's positive forecast for 2023 caused the stock to keep rising. If you enjoy the video, please hit the like and subscribe buttons. I'll see you in the next one. Never count Musk out. Do you agree with Gary Black's assessment? Is there logic to it?